Thursday afternoon, everybody. We are almost through another week. Really surprisingly low volume today. Really, there is just a lack of trade today, I would say. And that's, after the PPI report today, which came in hotter than expected. So the market has been kind of on its heels a little bit. S&Ps are now rallying pretty much off their low of the day. NASDAQ is back above 20,000 right now. It had just dipped under. The Dow is, somewhere down 50-ish, 70-ish or so. Really a lack of trade today now that that news is out. Definitely some pressure, though, in the bond market. Rates are ticking higher again. So bonds are getting less expensive. Rates are ticking higher. And that's because even though the probability of that rate cut next week is almost 100%, it's the longer term because of the CPI and the PPI report. Inflation's still a little bit hot. So we've got to watch out for that. But, we know that this market can change here on a dime. So not a lot more economic reports before the Fed meeting next week. So it's pretty much in the bag that they are going to lower by a quarter, but rates are still ticking higher. Those of you that were in our GLD, or actually our Nugget and UGT position, know that we cashed out nicely on half. We were able to make a great roll yesterday as gold had rallied, and then the gold miners, the Nugget, had rallied quite a bit because of the PPI and CPI report together showing that inflation is a little bit hot. Gold took a little bit of a fall today. I think it was down 45, 50 bucks an ounce at one point. GLD is down. Nugget is down as well, though they are off their lows of the day. All right, everybody, let's dive in. Okay. How many of you trade 0 DTEs? Okay, whether they are in SPX or even if it's an expiration day, if it's a Friday expiration day, options that expire that day, okay, would be considered 0 DTEs. But do you trade 0 DTEs? Let me know in the chat here. All right. Well, not sure if you know this or not. Okay. But 0 DTEs, the popularity of them have risen to the point where they are now 50% of the volume in the SPX. 50% of the volume in SPX. Pretty crazy. And I've got 0 DTEs up here. All right, not 0 DTEs. I've got SPX up here right now. Okay, and we're going to look through here, but we're going to look for the volume of these 0 DTEs. So look at this volume here, guys. Look at this volume. Okay, especially, kind of right around the money, just out of the money. That is massive, massive volume. That is massive volume, even for a slow day today. And when I say massive volume, I'm talking about in relation to overall volume in SPX. So with that, everybody, let's dive in here. What is 0 DTE? Okay. You never know, Pat. You never know. There's good trade that can happen there. Okay. So 0 DTE. These are some stats, a little bit of overview right from the CBOE. Okay. 49% of all SPX volume are 0 DTEs. The popularity of 0 DTEs is just expanding and expanding and expanding. Okay. Now, there's SPX, which is the big S&P contract. CBOE also offers another index product called XSP, which is very similar to SPY. SPY is an ETF, which is essentially 1/10 the size of SPX. XSP is 1/10 the size of SPX also, but it's an index product. Okay, hasn't taken off great yet, but it is a really good product at CBOE. 32% of all volume traded there are 0 DTEs. So what's another word for 0 DTE? Same day expiration. Okay, so whether you trade them now at 12:06 and they expire today, or whether you traded them on the opening of the market, or whether you trade them at 2:58, doesn't matter. They're options that expire the same day. Okay, and you just have to understand, if you're going to trade them, you have to understand the Greeks. Okay, you have to understand the sensitivity, and that's what this is right here. The sensitivity of what happens to an option as you get closer and closer to expiration. We're going to go into that, but everything is magnified, right? Because at the end of today, just like if it were just a normal Friday and we had an expiration of a weekly option on, okay, everything is magnified because we know at the end of the day, the value of that option is either going to be 0 deltas or 100 deltas, right? And we know, as we're going to see shortly here, the theta, the extrinsic value, the premium in that option, the loss of it accelerates quicker and quicker and quicker and quicker. Okay, so these are some benefits of trading 0 DEETs. And that's what we call them. We don't call them 0 DTEs, we call them 0 DEETs. Okay, so they allow users to take a very short-term position, right? Especially if you want to put a position on, if you're looking for a reaction based on, like this morning, PPI or a Fed announcement or anything else. Obviously, 0 DEETs, because of the very, very limited time to expiration, are going to be a lot less expensive than choosing an option that's further out in time. Okay, they are extremely, extremely liquid. So if you're trading in them, you don't have to worry about wide markets. They are extremely, extremely liquid. Okay, they have lower premiums, right, because of the time to expiration. Okay, but with that, you also have to manage this really proactively. Okay, you really have to manage them proactively. Now, there are very popular trading strategies. Okay, and many of these strategies are credit spreads because of the quick nature of that theta, because of how quickly that extrinsic value, that premium, okay, absolutely erodes so quickly. There you go, Craig, right? You're doing it with credit spreads. We're going to talk about that right now. It doesn't mean you have to trade a credit spread, but that's what the majority of the retail trade in there. Okay, so as you can see here, some of the most popular 0 DEETs strategies are selling call or put spreads or an iron condor. Okay, now people that are buying, that are looking for a big move, they may buy an outright call or put. Okay, maybe they're doing something to hedge another position they have. You never know, right? You never know when you see that volume if someone is hedging another position or taking an opening position or whatever it might be. But again, the nature of this product lends itself to credit spreads because of that really quick acceleration of theta. Okay, so this is selling a call or a put spread here. Butterflies are great also. What's your option? Excellent, excellent, excellent. So selling a call or put spread, based on your directional view of the market. Okay, you're taking in limited risk. You're taking in a credit, but you have limited risk. Okay. Spreads no different on a 0 DTE than it is on a weekly, a monthly, whatever it is. You are limiting your risk. You are limiting your risk. Okay. If you're bullish, by the end of the day, you might be selling put spreads. If you're bearish, you might be selling call spreads. And if you think that the market is just staying here, there's your iron condor. Okay, so here's just a quick overview of, and it's no different selling a call spread, selling a put spread than if you were doing a weekly, a monthly, whatever. It still looks the same. Your P&L still looks the same. You just get there a lot quicker. And quite frankly, one of the reasons that CBOE created this product is just because of that reason. So much of the retail trade has become, I want it now, right? I don't want to wait 2 days. I don't want to wait a week. I don't want to put a position on later on. Okay. I want it now. Well, now you have the opportunity to trade and basically, not get instant gratification or, if you're on the losing side, instant depression, if you will, but real quick. Iron condors for people that believe the market is going to be pretty stable. Okay. Boy, these are incredible plays on 0 DTEs. Again, you limit your risk by trading an iron condor because you're selling both call spread and a put spread. Okay. What is that? Iron condor, awesome strategy. One of the best videos ever. Thank you, Paul. Thank you. Okay. We go through this. We put on iron condor positions. We talk about them all the time. Again, keep in mind, things accelerate so quickly. And that's why I put this slide in here. We go through this often. Okay. This explains theta, one of the Greeks. Okay. And we know that if you have an option expiring, way out in time or even just weeks out, there's very little theta to start here. And you can see that. And then it just gradually picks up the closer and closer you get to expiration. And then, excuse me, everyone, theta is not linear. An option does not decay the same every single day. It is not linear. Okay. So, Pat, you read my mind, Pat, but let me get through this first. Okay. Great question. So the closer and closer we get to expiration, boom, the more that theta picks up. Okay. So this is a look at an option that's 4 months out, 120 days. Now, as Pat just asked, and no, Pat and I didn't discuss this before today. How about that, Pat? How about that? Okay. This is a breakdown of how theta has worked. This is real data, okay, compiled by the CBOE, how theta has worked in different scenarios on 0 DTEs. Okay. The top one right here, everybody, and it makes a lot of sense. Okay. That's on FOMC days. What does that mean? Those are our Fed report dates, like we're going to get next Wednesday. Next Wednesday is a Fed day. What you will see is there is very little theta until 1 o'clock our time, 2 o'clock Eastern, 1 o'clock our time, when the announcement comes out, what the Fed is going to do. And then, Bobby, like what you said, you really see that acceleration, right? For the next 2 hours, it's literally falling off a cliff. Okay. Now, on big, heavy volume days, okay, why all the spiking? What do you mean by the spiking, Paul? I'm not sure what you mean by that, but happy to answer it if you can clarify that for me. So this next one here, okay, is on a heavier volume day where the market is moving quite a bit. Okay, you see a big drop off right away. So if there's been a big overnight move in the market opens, Okay, you get a little bit of a pop, and then typically what you'll see is a big drop off, and then we kind of flatline a little bit, and then it accelerates into the end of the day. Okay, then on a normal trading day, like kind of what today is, and I'm going to show you some live examples here. Okay, on a normal trading day, it's kind of steady here until the very last part of the day. So Pat, I know you asked about this. I actually am going to get you a resource for this. In fact, I think that bit.ly, okay, that bit.ly that's up there, if you guys all copy and paste that, that is actually not my presentation, which I will give you a link to. That's actually a link right to the CBOE's, what they call white paper, that explains and breaks down everything about how zero deeds work. Okay, so that bit.ly link up there will take you right to a CBOE link, which is really, really helpful, really useful. Okay, guys, I know a few of you put up that you knew what the word of the day was going to be, and it was going to be zero, but it's not. It is deets. It is deets. Groucho and the Ducks say deets. Let's get that wheel filled up, everybody, and let's smash those like buttons, please. Please smash that like button on your YouTube here, guys. Okay, let me show you what I mean. Okay, here is my Zero Deets Market Minds YouTube page. Okay, do you see this here, everybody? Smash that like, subscribe. Okay, we need it. We need it if you want me to keep doing this. And I love doing it, but we got to grow this up. Okay, and you can see this is live. Look at the chat coming through here. There we go. Look at all these deets coming in here. All right, so help us out, everybody. Help us out and smash those likes. Okay, now let's check this out here, everybody. Okay, so we know, and I would call today a pretty normal day. Even though we had PPI this morning, I would call it a pretty normal day. Volatility is kind of nothing here. Okay, so I would call this a normal day. Now look what I did. This was a snapshot. Live markets. Okay, thank you. Option trading Don. I love trading Don. I love that. Hulk it out. I love it. Maybe tomorrow is going to be Hulk it out. Never know. That could be the word of the day. Okay, check this out, everybody. This was live data at 11 a.m. So basically 1 hour and 18 minutes ago. 1 hour and 18 minutes ago. S&P's, SPX, was trading 60, 73, 58. Does everybody see that? 60, 73, 58. Okay, if we look at the market, and I'm just looking, right around at the money, so we can really, really hone in on the extrinsic value. Okay, the extrinsic value on the 60-75 call, which obviously is all premium, it's just out of the money, was $4.15. Okay, does everybody see that? $4.15. Okay, good. The extrinsic value okay? The extrinsic value on the 6070 put, 6070 put. So almost the same width away from being in the money. So just slightly out of the money. What happened to it? Or where is it? $3.75. Okay. So that was at 11 a.m. At 11:55 a.m., and I had to switch screens here real quickly. At 11:55 a.m., so just before we went live, S&Ps were within 3 cents, so basically the same exact place. So fortunately, I was able to capture that so we could see the difference in the premium. The extrinsic value, or the value of the 6075 call, went down to 385. The value of the 6070 put really took it on the chin. Okay, 315. Look how much premium, look how much extrinsic value came out in 55 minutes. Okay, now let's take a look. Let's take a look real time right now. Let's look real time. Let's go back to, no, you don't want to see me. There we go. Okay, so S&Ps are a little bit higher right now, SPX. Blow this up for everybody, but that doesn't matter because we're just measuring extrinsic value. Okay, the 6075 call is 480, so that means there is $3.80 of premium. $3.80 of premium. Okay, because it's $1 in the money, $1.10 in the money. Now it's fluctuating around because we're still, looking at a live market here. The 6070 put down to 210. $60.70 put down to 210. We'll do this one more time before we sign off in 8 minutes. Okay, but if you guys keep a really, really close eye on those specific options, and again, I used those specifically because they were surrounding right at the money, you are going to see what happens minute by minute. Okay, here we go. Deets. Bobby, it's terrific premium. It's great premium. Okay, but you also have to understand how the Greeks work. It's not just about theta, right? It's also about how quickly an option goes from 0 to 100 delta, or whatever delta you're at, 40 delta to 100, or 40 delta to 0, right? That's the gamma. That's what's known as the gamma, is the rate of change in delta. And gamma also, just like theta, okay, just like theta, gamma also accelerates the closer and closer, excuse me, that you get to expiration, especially if you're right around being at the money. Okay, does everybody understand why? Does everybody understand why? Let's say at 2:55, okay, 5 minutes before the close of the market, an option is right near being at the money. So it's 50 delta, right? It's 50 delta. Well, we know by the end of the trading day, 5 minutes later, when that bell rings, that option's not going to be 50 delta anymore. It's going to be either 0 or 100. So you see that gamma, just like the theta, accelerate unbelievably in that last hour, especially those last few minutes of the day. If you were to look at an at the money option a few days out, a week out, a month out, okay, that gamma's not going to change too much. But because we know that those option deltas are like a magnet, they get pulled in one direction or the other, either the 0 or 100 at expiration, an at the money option has the greatest gamma, right? Because you're going 50 to 0 or 50 to 100. Well, Bobby, there's no question it's risky at the monies, but that's also going to have the most premium, right? Anytime you sell an at the money, that's going to have the most premium. So it's riskier in terms of the move of going to 0 or 100 delta, but you're getting paid for it, right? It's that risk reward. Remember, we always talk about this. Okay. Whenever we look to get an advantage on something, right? It's like a scale. If we're getting it, an advantage on something, we've got to be giving something up on the other side. So if we're getting more premium, we're probably giving up some risk on the other side, or vice versa. Okay. There is, everybody. And I'm going to put a link to this website in here right now. It is a just tremendous web page within CBOE. Okay. Not just about zero deets, but learning about index options and strategies. And, you guys, we have an incredibly deep library of videos and educational tutorials. We cover just about everything. But if you want to get another perspective on it, CBOE's website and their education part of their website, guys, is fantastic. They offer a ton. So that link that I just put up there will take you to this webpage at CBOE. Okay. All right, let's take another look here. Okay, I know it's only been 5 minutes. Let's take a live look and see what these things are trading. Okay, S&Ps have moved even higher. So now the 60.75 only has $3.25 of premium. Okay, it was just $3.85. It's now $3.25. And the 60.70 put hasn't moved quite as much. All right, guys. So again, I really, we don't trade them in the room because it's a day trading mechanism. Mike Shore may trade them. As Pat said, you never know. Maybe we'll open up another room where we are just trading zero DTEs. You never ever know. All right, everybody. Any questions on these before we go to the wheel? Any questions before we go to the wheel? Typical SPX credit put spread reward to risk about 4 to 1. Tom, I mean, it's hard to say. It depends what time of the day you're doing it, right? Because things are going to change so quickly. But I agree with you. You probably need to get more or higher reward to risk because your risk is higher of something moving quickly. Paul, that bit.ly link from earlier, that takes you to the CBOE, what they call white paper. It's like 12 pages or so that breaks down everything you need to know about zero DTs or zero DEETs. Bobby, sure, it's less risk, but again, so let's talk about that. Bobby said trading a couple strikes out of the money gives you less risk. Absolutely, it's less risk. But if I'm taking less risk, what is on the other side of the scale? I'm getting less premium. There you go. Less risk and less reward. Exactly. I mean, it's always going to be a matter of reward and risk and trying to find that arbitrage. All right, everybody. Let's give it a whirl on the wheel. Here we go. Paulie or Edward, we've got a new winner in the house. We've got a new winner in the house. Paulie, are you here? Are you? Oh, I'll put it up here again, Paul. I'll put it up here again for you. Are you here, Paulie? Got to be in it to win it. Come on, Paulie. Yes. Love that. Love that. Okay, Paulie, make sure you email me right away because I've got a bunch of swag that's getting mailed out today from about the last week or so. Say the last name. No, we're going to stick with Paulie. I don't want to butcher that one. Paulie, make sure you email me right there, okay, to give me your name, mailing address, and size swag. Okay, I'm looking for that link here, guys. There we go. Anybody that wanted that bit.ly again, Paul, there it is right there. Okay. All right, everyone. Oh, one last thing I wanted to say. This type of trade has become so popular. Okay. I know this for a fact. Okay. There are very high level talks with both the CBOE, SEC, the other exchanges on listing 0 DTEs in some of the real big cap names like Apple, NVIDIA, Microsoft, some of the others, kind of on a trial basis. I know that it is kind of in process, and the expectation is that those would come out sometime in the second or third quarter of 2025. So, July, August, maybe somewhere September, somewhere in that range. All right, everyone. Thank you, Bobby. Thank you for that. Jake Jacobson, haven't seen you around for a while. How you doing, man? Jay, you're very welcome. The pocket option trend. I mean, that's, that goes along, I think, with instant gratification, right? Everybody wants instant gratification. All right. Have a great one, everybody. Have a great rest of the day. Teenagers trading options now. Yeah, for sure. For sure. That's the Wall Street Bets, the Reddits of the world. Right? And Craig, yeah, those stocks and the majority of the big cap names have weekly options. So if you trade them on a Friday, it's like trading a DTE, a 0 DT. Pat, is that an app? You can Google it and find out all about it, but you never know. You never know. Maybe we'll do something here. Have a great day, everybody, and we'll see you later.